Yeah, absolutely sorry. You can see the presentation,
Yes, sir.
but you cannot see me, no? You can
No.
see, you can see my face? No, no?
Yes, sir. I can see, sir.
Okay, fine. So, yeah, so this is basically an analysis of the whatever important decisions. So I'm not covering everything. It is only important recommendations what GST Council has discussed and released in the press release. So the first one is a waiver of interest and penalties. So it is just like an amnesty scheme. So where they are going to insert a new section, section 128A, which will actually see it's what how the wording is. It is a conditional waiver of interest or penalty or both on full payment of tax demand if it is paid before 31st March 2025, raised in notices issued under section 73 for the financial years 1718 to 1920. So if any notice under section 73 is issued for this financial years, and if the tax demand is paid before 31st March 2025, then the interest and penalty will be waived off. Again, it is a conditional waiver. So we don't know what is the conditions going to be. That is not disclosed or told in the press release. That will come as a when the amendment is happening in the when there is an insertion of this section 128A in the Finance Act, the budget of next month, we will have a clarity what is the conditional waiver. I feel this conditional waiver may be if you have already paid the interest or penalty, then maybe this is not applicable. You cannot get the refund back. So these are for the people who are not honest. So honestly, who have paid the interest and penalty, they have paid, nothing can be done. So the people who have not paid the interest and penalty, for them, this scheme may be helpful. But again, even in the previous history also, we have seen many of the high courts and even Supreme Court, they have told the benefit should be equally available. It should not be discriminatory in nature. So if some class of taxpayers are getting the benefit, the other taxpayers who have diligently paid the taxes should also get that benefit. So definitely, of course, we have to read how the amendment is going to come. But per se, if at present you have a notice in hand, or order is issued, or it is lying in appeal, or it is lying in a writ in High Court, any of these situations, you can pay the tax. No interest and penalty needs to be paid. So this is one amnesty scheme. So generally in the amnesty scheme, always the people who pay the taxes correctly, pay the interest and penalty correctly, are the people who will suffer. So this is one sign. Then again, monetary limit to file appeal. So department, see, suppose you order is passed in your favor either by the adjudication stage or in the appellate stage, department can go for appeal. So now they have set a limit. Above that only a department can file an appeal. So this limit is if it is a tribunal which is going to get formed in another 4 5 months. So if department has to file an appeal against an order in tribunal, minimum limit should be 20 lakhs. High Court, it should be 1 crore. Supreme Court, it should be 2 crores. So anything below this, if a favorable order is passed for the SSE, then if it is below this limit, department will not file an appeal. Again, this may be coming with some conditions, some uh, below the line asterisk mark where suppose if there is a place of supply issue, suppose if there is any valuation issue, maybe they may come with exceptions to this rule. This is one more relief which has come. If you see, even though this is a relief, but if you see the pre-GST era, the pre-deposit in excise service tax used to be, in the first appellate stage, it used to be only 7.5%. And in the tribunal stage, it used to be additional 2.5%. So basically 10% was the total pre-deposit, which in the pre-GST era, it was there. But when GST came, it was a stringent pre-deposit norms where 10% had to be paid in the first stage. And if in the second stage, that is the tribunal stage, you have to pay additional 20%. So 30%. So if you have to go to tribunal, 30% of the disputed tax amount has to be paid as a pre-deposit. So there was a feeling a government doesn't want you to file an appeal, and you are not getting a fair chance to fight your case. So with this recommendation, the first appellate stage, the percentage of 10% remains the same. Only thing is the amount, the maximum amount, it was 25 crores. That is 25 crores, 25 crores, 25 crores CGST, 25 crores SGST, 50 crores. That has been reduced to 40 crores, 20 plus 20. The major relief is if you are filing an appeal in the tribunal, which you have, again, tribunal is going to open up now. They have reduced the percentage from 20 to 10%. So additional 10%. So first appellate authority, you pay 10%, and in tribunal, you pay another 10% instead of 20%. Again, the limit there is reduced to 20 and 20 instead of 50 and 50, 100 crores. So this is one big relief, which in the pre-deposit, you will get. So I request if anybody has got any query, you can note it down, and in the end, we'll have a question, so you can ask. TCS, you are aware, e-commerce operator, if you are supplying any service through an e-commerce operator, they collect TCS for a restaurant service or for any services where like an urban clap and all those things. If the service is passed through the e-commerce operator, they have to collect TCS. The rate used to be 0.5%, 0.5%, 1%. Now it is reduced to 0.25, 0.25, 0.5%. It's a marginal reduction, but if you see an overall thing, definitely there is a big relief for the suppliers, because why this rate is reduced is there was a feeling in the industry, okay, their ITC is getting accumulated. So there is a tax cash accumulation in the account of the suppliers, and they cannot use that amount. So it was lying in the cash ledger. So that is the reason the rates have reduced, so that there will be some cash working capital will get improved for the suppliers. Then appeal before the tribunal. Not, as I told, tribunals have started, the principal bench president has been appointed, and very shortly, within next 4-5 months, state benches also will start functioning. So there was a confusion where if there was a circular issued in 2020, which said within 3 months of the appointment of the president, the appeal should be filed, because now the appeal, whatever is not in favor of the SSC. Prakash, if anybody you have to mute, you can mute, okay? So if there was a confusion where the circular in 2020 had told within 3 months of the appointment of the president, the appeal process has to start in tribunal. Now, GST, almost it is 7 years, and first appellate stage, wherever there is a adverse order passed against the SSC or against the department, they cannot file an appeal in tribunal, because there is no tribunal constituted. So High Court had given a stay on any recovery till tribunal was functional. Now, president got appointed in the National Appellate Tribunal in Delhi on 6th of May 2024. So there was a confusion because of this circular within 3 months. That is, within 6th May, June, July, August. 6th August is the due date. Before that, all the appeal in tribunal has to be filed. So the tribunal still it is not constituted in state level. So now what they have brought an amendment in section 112, which says 3 months period will be notified. So this 3 months from when it has to be started, that will be notified. So it is not as per the circular which was issued in 2020. So now they will notify the date from when this 3 months time will start to file an appeal before the tribunal. Again, a big relief. I think this is the biggest relief which everybody were looking at. Time limit under section 16(4). So wherever the returns were filed late and the credit was belatedly availed, most of the taxpayers were getting notices for reversing such credit. Now, GST Council has recommended that for the financial years 17-18, 18-19, 19-20, and 20-21, if you have filed your GSTR 3B before 30th November 2021, you can take the credit. There is no need for reversal. So this is a very positive step which the government has taken. So for 17-18, if you have filed your 3B before 30th November 2021, you are eligible for taking the credit. You need not reverse it. So suppose if any notice, any appeal, any order is lying based on this 16(4), now you can take a stand telling there is a recommendation, there is amendment which is going to come, or in 16(4) itself, there will be an amendment which is going to come. So you can wait for the amendment and then take action. So this is, again, the credit has to be taken in 3B. If you have not taken the credit in 3B, but only shown in GSTR 9, I doubt whether you can get the benefit. So credit has to be taken in 3B. This is one more amendment which is going to come on 16(4). So this is retrospective from 1/7/2017, where what they are telling is so many writs were filed in the High Court where they cancel your registration. And then they cancel your registration for various reasons, not filing returns. And then you could not file your returns because the registration is cancelled. And then the time period for availing the input tax credit is expired. So in such cases, many such taxpayers used to file it belatedly and then go to High Court and ask for waiver. Now they are planning to bring an amendment itself in 16(4), where they will say if your registration is cancelled and later on it's revoked, the time period between the cancellation and revocation will be excluded for the purpose of calculation. And once your revocation is done, within 30 days, if you file your 3B and take the credit, it will be allowed. So this is one, again, an important amendment which is going to come. For composite taxpayers, GSTR 4, 30th 4 used to be the due date. It used to be a very tight situation. You complete your financial year and you have to file your GSTR 4 within a month. So they were facing it very difficult. Now, from the year 2024-25, they have extended this date from 30th April to 30th June. So now you'll get 3 months time to file GSTR 4. Again, a welcome move. The interest on you filed, you have got your money deposited in your e-cash ledger, but you have filed your return late. So whatever amount is lying in the e-cash ledger, the department used to charge interest, and the law also was bending towards that. Whatever interest, only if you file your GSTR 3B and distribute that credit between IGST, CGST, and SGST, then only it will be treated as the payment of tax and not when it is deposited in the e-cash ledger. Now, Rule 88B is going to be amended, where they are telling even if the amount is lying in e-cash ledger, it will be treated as tax payment and no interest will be charged. This is basically a Madras High Court judgment in the case of Eicher Motors, where Madras High Court has told the money paid in e-cash ledger is as good as tax paid and no interest should be charged. So seeing more high courts and maybe a Supreme Court will pass such favorable order, they are looking at amending the rule itself to give this benefit to the taxpayer. Then regularization of tax short paid or not paid. So a new section 11A is going to be inserted to give powers to the government on the recommendation of the council to allow regularization of non-levy or short levy of GST where tax was being short paid or not paid due to common trade practices. Now what happens? Many a times the trade practice thinks that this is my tax rate. For example, trade practice thinks that 12% is my tax rate. But eventually it may happen, government decides, no, it is actually 18%, you misinterpreted as 12%. So there is a difference of 6%. And you go back to next 3 years, 4 years, before 3-4 years, and it becomes difficult to collect it from the customer. And even the input tax credit is not available. So many a times the customer or the taxpayer gets into deep problem because of this misinterpretation, because of the common trade practices. So there's a new section which they're going to insert where the government will come out with a notification or a direction telling if there is a short payment or no payment, the taxpayer should get a relief. So it will be on a case-to-case basis, or how this section is going to be framed, we have to see. But this is basically to regularize any tax short paid or not paid because of any tax differences. It may happen, this section is not only for tax payment, it can be for a tax refund also. So if vice versa, instead of 12%, 18% you are collecting, but then it becomes 12%. It should apply for refund also. It is not only applied for tax payment, it should apply for refund also. So such a relief should be for refund also. This is pertaining to exports. So if you see the present system of refund, it is with payment of tax, it is not on LUT. If it is on payment of tax, if you are exporting some goods, through bill of entry, it comes to GSTR1 and it's an automatic route for refund. Suppose if you export, there is a particular rate, you export bill of entry, you GSTR1 file, you get the refund, and later on or in the process, there is a credit note or there is a debit note where the rate is revised and the amount which you have mentioned in the invoice is now increased. So there is a debit note raised. So the amount realized is more, but because of the system, you are not able to apply for refund. So now GST Council is recommending a mechanism for claiming such refund. Maybe it may be manual, it may be electronic, we don't know. We'll see how they're going to come up. But now this differential portion, whatever that debit note or the increase is there, that you will get a refund in a separate process. A transition credit. So still we are hearing about transition credit, even though it is 7 years. Still transition credit is been spoken in GST Council. So transitional credit for this amendment is if an ISD in the previous regime, that is in service tax and excise also, there used to be an input service distributor. If they had any input tax credit accumulated and they want to shift it to the GST, section 147 bracket 7 is going to be amended where ISDs will be given that benefit of transferring the input tax credit to the present ISD in GST. Again, a welcome move, GSTR1A, which was also been spoken about a lot before the GST Council meeting. Now you can amend your GSTR1. So if you have done a mistake in GSTR1, you can amend GSTR1 by filling up a form GSTR1A. So automatically in the same month, your GSTR, what gets auto-populated in GSTR3B will be after the correction of GSTR1A. So it has to be amended before GSTR3B. If you don't do it, then you don't get a chance to amend in the same month. Then as a normal procedure in next month GSTR1, you have to amend. So if in the present GSTR1 you make a mistake, or in IFF, if it is a quarterly filer, if you make a mistake, you can correct it by filing a GSTR 1A before filing GSTR 3B. This is again the continuation from previous years where they used to give benefit of filing GSTR 9A up to a turnover of 2 crores, it was exempted. Now for financial year 23-24 also, they want to continue this exemption. So if your turnover is more than 2 crores only, you are required to file GSTR 9 and 9A. Penal provisions for e-com operators. There was a confusion, or many e-commerce operators were getting notices for non-compliance because any supplies made through them, they have to collect tax on behalf of the supplier, one person, and pay it. So, but all the suppliers who are supplying through e-commerce operators are not required. The e-commerce operators is not required to collect TCS. So such cases may be an unregistered supplier or a composite supplier. In such case, e-commerce operator is not required to collect TCS. Similarly, if a supplier is using e-commerce operator only as a platform, the money is not collected by e-commerce operator. Money is collected directly by the supplier. E-commerce operator is only letting his platform to be used. In such situation also, e-commerce operator is not required to collect TCS. But the system doesn't understand this, and it was issuing notices and penalty notices to the e-com operators. Now, a new section 122 1B is being inserted, I mean amended, so that now there is a clarity that whenever there is such exceptions, penal provisions will not be levied on the e-com operators. DRC 03 for pre-deposit. Many a times it happens, instead of paying your appeal pre-deposit through the normal APL 1 route, you pay through DRC 03, and then you are left high and dry because when you file an appeal, you cannot adjust your pre-deposit what you paid in DRC 03 with the APL 1. So there used to be a double requirement of paying double time, one with DRC 03 which you paid by mistake, and then APL 1. So now they want to clarify and amend the rule 142, which will allow the pre-deposit in DRC 03 also. A very I don't know whether I can say it's a good move or a bad move. Definitely, I think it will be a bad move because government will do this for their benefit. A new section 74A is going to be inserted. So 73 section is for non-fraud cases. 74 is going to be for fraud cases. So 73 notice has to be issued within 3 years, and 74 notice has to be issued within 5 years. Now they don't want a discrimination between 73 and 74. They want the time period for both to be one. So they are inserting a new section 74A where there will be a common time period for issuing the notice both under 73 and 74. Now we have to see whether they will make it 3 years, whether they make it 5 years, they make it 4 years, or what is the time limit they may give. Again, this is applicable only for the orders, notices and orders from financial year 24-25. It's not applicable for the previous financial year. Only for the current financial years, this new section will be applicable. But again, we have to see how this amendment is going to be made. If you see section 73 and 74, if you pay the tax within 30 days from the issue of notice, in 73, the penalty is waived off. In 74, it is reduced to half. Now, this 30 days window, they have extended it to 60 days. So within 60 days of the issue of notice, if you pay the tax, then penalty in the 73 will be waived off. So this is again a welcome move. Anti-profiteering clause was inserted basically to bring under control the corporates or the SSEs to pass on the benefit if they are getting any benefit because of the implementation of GST or any rate revision which is happening. If they are getting any benefit, they have to pass on that benefit to the customer. So to bring that control and this one on the taxpayer. This section 171 was introduced as an anti-profiteering measure. Now, since 7 years is over, government doesn't think this is anymore required. So finally, section 171 is going to have a death. They'll come out with a scheme where they will say it is going to get maybe from this financial year, this section will not be active, and any cases pertaining to anti-profiteering will be handled by the principal bench of tribunal. Again, a clarification on refund if export duty is paid. So presently, refund is restricted only in LUT. So if you're an exporter and you have paid your export duty, you cannot get a refund specifically mentioned. If you are with payment of tax, you can get the refund. If you are under LUT, you cannot get a refund. So there was a confusion whether, because once export duty is paid, you are not eligible for a refund at all. So many people, many taxpayers used to take the route of automatic tax route and get the refund through GSTR 1, and through LUT anyway it was not possible. Now they are bringing an amendment in section 16 and refund section 54 on refund, where they are telling even on payment of taxes also this refund will not be available. To improve the compliance, and basically it is for tracking the transactions. So the B2C transaction, which you mentioned in GSTR 1, which used to be 2.5 lakhs and above, now the threshold is going to get reduced to 1 lakh. So any B2C transaction above 1 lakh, you have to specifically mention. Basically, this is to track the transaction and increase the compliance. Mainly so this is brought in to check the place of supply, because it is very important. Our GST is a destination-based tax. So which place the final consumer is there, that state only gets the portion of the tax amount. So to improve the compliance and increase the revenue of that particular state, this amendment is being brought in. GSTR 7 for TDS returns. So if your TDS return, if any month TDS is not deducted, you do not file GSTR 7. In the month where TDS is deducted, you have to file. Now they have made it compulsory, means they are recommended to make it compulsory. Even if no TDS is deducted, you have to file GSTR 7, irrespective of if it is there or not. And late fees, if it is nil, late fees will not be there. So late fees will not be there if it is nil, but then you have to file your GSTR 7. Further, it has been recommended that invoice-wise details may be required to be furnished in the set. So invoice-wise details has to be given in GSTR 7. Again, rollout of biometric-based Aadhaar authentication. This is basically to avoid fake registration and avoid people taking registration without any proper address. So now they are planning to roll out the biometric Aadhaar authentication. This was already in trial in the state of Gujarat and Puducherry. And as far as my information goes, the registration process is mess in these two places, and left and right registrations are getting rejected because of this system. Even though the system is not doing pretty well, the GST Council has decided to roll out this scheme throughout the country. So we have to see what havoc it is going to make. Let us see whether they're going to improve upon whatever problems were there in this two states, or as it is, if they implement in other states, I think it's going to be very difficult. We have to see how they are planning to roll out. Again, a welcome move on import of service from distinct person. So if you are getting any services from your branch or a head office or your related party from abroad, department was taking a view and calculating, okay, on what basis, what is the value you have taken for the services. And there were a lot of litigations on this aspect, even though Rule 28.1, proviso to Rule 28.1 was very, very clear. If there is an input tax credit which the recipient is taking, then the value, the transaction value will be the deemed value. Now, the government wants to clarify, and they will come out with a circular or a clarification on this, where they have told even if the value is nil, there will not be any liability as long as the domestic company who is registered has the provision or has the eligibility to take the credit. So if he is taking the credit or he is eligible to take the credit, whatever value of import of service which you have to pay in RCM will be treated as the deemed value. Even if the value is nil, it will be treated as a deemed value. So this is the clarification which the government has come on the import of services. Corporate guarantee, they are going to clarify and maybe bring an amendment in the Rule 28.2 on the valuation part of the corporate guarantee. Now, corporate guarantee itself is a very tricky issue, and it has to be tested in the court whether there is a service element in the corporate guarantee. So, corporate guarantee is you have got two private limited companies, and one company is giving guarantee to the banker on behalf of the other company. So, you are giving a guarantee for your sister concern or a subsidiary or whatever, and the department of the government thinks you are giving service to that concern, and there is a GST. So now the government is going to clarify on what issues, what are the valuation, how you are going to clarify, how you are going to value that transaction. We have to look out how they are going to do it, and they have in the GST Council, they have decided this corporate guarantee will not be applicable in the case of export of such service. So if there is an export of service where your sister concern is abroad and you are giving any guarantee outside, in such situations, GST will not be applicable. Now, generally the valuation is 1%. So if you have given a guarantee for suppose X amount, the 1% of that amount will be treated as a taxable value, and on that 18% has to be paid. Still, there is a lot of confusion. This 1% has to be paid every year throughout the period of that guarantee, or it is a one-time payment. If there are multiple guarantors, so if 3-4 of your group companies have given the guarantee, how you are going to split the transaction, because it's not amount wise. You generally give a guarantee on an overall thing. So how you are going to split that? So there is still no clarity on that. We are expecting when they are clarifying on this aspect, the said things also will be clarified. Very interesting. Self-invoice. So in RCM, I'm sure many of you are aware of this provision. If you are procuring any service from an unregistered supplier and it is taxable under RCM, for example, a GTA. For example, nowadays in Hosur, it is on mining services or government rentals, where you pay for the service and you get an invoice from an unregistered person. You cannot take the credit because it is for the previous years. Now, for example, I'll tell you, 17-18, there is a GTA service. You got a GTA service from an unregistered person for 17-18. Now the audit is going on in 24-25. The GST auditor is telling, sir, you have to pay GST under reverse charge. So please pay, and you cannot take the credit because it is for 17-18. Please bear in mind, as per section 31(3)(f), if you get any service from an unregistered person, you have to raise a self-invoice, because under that self-invoice only you pay the tax and take the credit. It is not on the invoice of what the supplier of service gives you. So the council has recommended it is going to clarify the self-invoice when it is raised. In that year only you can take the input tax credit. So in this particular case, when I was telling 17-18, if you have taken a GTA service and you raise a self-invoice in 24-25, you can take the credit in 24-25 There is no time bar for that. Only thing you have to keep in mind is there may be an interest liability because this RCM you had to pay in 17-18, which you are paying now. So the interest of 18% has to be paid from 17-18 to whatever time you are paying. So that interest liability is there, but there is no issue with claiming the input tax credit if this amendment is brought in. Again, few clarifications to be issued. Clarification on the taxability of wreck and salvage values in motor. So motor insurance, if you're claiming any insurance, there may be some salvage value which you get from the sale of. Suppose a motor car gets in the accident, you sell that as a scrap, you get some amount. So there was some issues on the taxability of such uh, receipts. They are going to clarify how it's going to be taxable. Again, warranty extended period. So whenever there is a replacement of part under warranty extended, how the taxability, though they have issued a circular in 2023 giving the various situations of warranty or extended warranty where the parts are replaced. They have given some 4 instances where what will be the tax liability in such situations, but still there are some gray areas where clarification is required, and I think GST Council has agreed to come with some clarification. And clarification regarding the availability of input tax credit on repair expenses incurred by the insurance companies in case of reimbursement mode of settlement. Now, see, many a times what happens, the insurance company, the customer, that is the taxpayer, gets the bills for repair charges and the insurance reimburses it. Now, the GST portion is actually the customer is getting it. But insurance company sometimes reimburses the GST also. So now the government is planning to come with a clarification telling input tax credit can be claimed by the insurance company if the customer doesn't claim it. He can claim it based on the invoice, what customer only gets, it will not come in two-way. So there is some clarification which is going to come in that also. So this is what I was telling. Input tax credit on repair expense incurred by the insurance company in case of reimbursement made by settlement of motor insurance claims. Clarifications on taxability of loans granted between related persons. Again, they're telling if any loan is granted by one company to another company, there is a service. They're going to come out with some clarification. Place of supply to unregistered person, where the delivery address is different from the billing address. Now, it may happen that I am from Tamil Nadu, I go to Bangalore and I buy some goods and I tell them to deliver it to Maharashtra. So I am from Tamil Nadu, I go to Karnataka but I tell them to deliver it in Maharashtra. So delivery address is different, billing address is different. So they're going to come out with a clarification, which is the place of supply. Because which government should get the tax? Whether Karnataka should get, Tamil Nadu should get, or Maharashtra. So there are some issues in this place of supply. So they are going to come with this clarification. And mechanism for providing evidence by the suppliers for compliance on the condition. Now this is post-sale discounts. Now many a times what happens, if you are issuing any credit notes, the post-sale discount, there is a credit note. Your outward liability, you reduce. So your outward liability, you can reduce only if you prove your recipient has reversed the input tax credit. Now, how you will find out whether your recipient has reversed the input tax credit for you to reduce the outward tax output tax? So now they are going to come out with some mechanism where when the reversal of the ITC is being done by recipient, the supplier will know about it. So there is some mechanism which is going to come. They'll come out with some clarification regarding this. Rate rationalization. I think here we will quickly go through. Uniform rate of 5%. So any parts, components, testing equipment, tools, toolkits of aircrafts, irrespective of HS classification. So this is for MROs, that is the aircraft maintenance and repairs. So now it will be uniformly taxed at 5%. So it will not be depending on the HSN code of parts, uniformly 5%. All milk cans, whether it is of steel, iron, aluminum, irrespective of their use, will be 12%. Carton boxes, whether it is corrugated, non-corrugated boxes, there was a confusion. Now, all carton boxes, whether it is corrugated, non-corrugated, or paperboard, HSN code, what is mentioned, will be reduced from 18 to 12%. Solar cookers, whether single or dual energy source, will attract 12%. Poultry keeping, so poultry keeping machinery was charged at 12%. Now they want to include even the parts of the poultry keeping machinery also in this. So poultry keeping machinery with the parts also will be taxed at 12%. Sprinklers, including fire water sprinklers, will attract 12%. SEZ, if they import any goods, all the duties and taxes for SEZ is exempted. So there was a confusion on compensation cess, whether compensation cess is also exempted. So now they are clarifying even compensation cess also will be exempted. Liquor is going to become cheaper. This is only a dream, but now what they have told is most of the liquor companies, they use extra neutral alcohol, which is used for the manufacture of alcoholic liquor for human consumption. So, as you're aware, alcohol is out of GST, but ENA is actually being charged with GST. Now, GST Council has decided to take ENA also, extra neutral alcohol also outside GST. So, no GST, it will be at par with alcoholic liquor. So, no GST will be charged for that. But if it is used for an industrial purpose, it will be chargeable to GST. So the liquor cost to that extent will come down. Railways, few services which railways gives to the public, like platform tickets, clock room, retiring room, battery operated cars inside the railways, all these things will be exempted. Hostel facilities, again, because of the advance ruling from Thai Mukambike, Madras, Tamil Nadu advance ruling, where they told even the hostel service is a residence and no GST should be charged. Taking the clue from there, and hostel till 1,000 rupees per day was anyway exempted, which became taxable from 2022. Now, they are again planning to bring back some exemption for hostel services. So any hostel services for students or working professionals, if it is within 20,000 rupees per month, and it is for minimum continuous period of 90 days, then GST will not be applicable. So this again, they're going to amend the notification number 12, where 1,000 rupees before it was there in notification 12 itself, which they rescinded. And after this Thai Mukambike case, where they told even a hostel service given to a students or a working professional also is a residence. And since residence is exempted from GST, hostel also will be exempted. Now they have brought a limit till 20,000 rupees and 90 days. It's a welcome move. So this is what is the amendments which has come, which has been recommended. So any questions? We are open now. Any questions? So what do you feel? These amendments are good? Good for anybody feels it is good for you? Okay, you are having some notice or order in hand, and then you can take the benefit of that interest penalty waiver 16(4). No
Hello?
question.
Hello.
Solunga Ashok. Yes, Natarajan sir.
Sir, this one, there's a 2A and 3B difference tax. They
Ah.
receive notice under section 74, whether it is valid or this thing.
See, 74, what happens is, again, this benefit of interest and penalty is there only for section 73. So it's always better you go for appeal, and in appeal, the appellate authority has got the freedom to convert that 74 into 73.
Okay.
So they can change the section from 74, 73. If you prove that there was no fraud, willful misstatement or suppression of fact, they can change the matter to 73. And then once they change, you can take the benefit of this amnesty. But again, we have to wait and see if government comes out with some solution for this, because everybody cannot go to the appellate authority and bring this change, because most of the notices are issued under 74. So if you see, I think 80% of the notice by default is 74.
Yeah, correct.
So if they really want to bring 73, then the intention is not. So maybe they may come with some clarification or some exceptions where you can come. Let us wait for that.
Okay. Thank you.
Any other question?
Yes, sir. Sudarshan from Netwell Needle, sir.
Yes.
Maybe my query is not related to this particular amendment. Just for a general clarification, see, we have one particular HSN code 8708. This is automobile industry. We charge 28% for the non-agricultural industry, and under the same HSN code, we charge 18% on agricultural industry. So this actually, like a practical applicability and the maintenance of accounts and our HSN, preparing a HSN summary, it creates a bit of confusion. Is there any changes anticipated in this particular regard?
See, this regarding this automobile industry, this rate of 28% and 18%, always there is a dispute. That is the reason they have formed a committee called Rate Rationalization Committee, where it was formed two years before. Now, since there is a change in the government and the formation, again, there is a change in the committee also. So I think they have been given 3 months time to come out with their rate, maybe some changes or whatever. So I feel the Automobile Industries Association should actively go represent before the Finance Ministry and bring this point so that they are aware of it. I definitely they'll be aware, but then more associations go and give representation. I think they'll take up in the rate rationalization meetings.
Okay. Thanks.
Anybody else? So this is basically the recommendations of the GST Council meeting. We will have a very good budget session. Like we are telling, it's a big bang. I told in one of my sessions, it is going to be big bang budget session. So you can see a lot of fireworks in income tax as well as GST. So what I have told is only what has come as a press release. I am 100% sure there'll be so many things which will be there in the Finance Act for GST, which is not come in press release. Either it will be good for us or bad, we don't know. But like Nirmala Sitharaman told, central government has issued only 2% notices. So if the overall taxpayers, if you count only 2% of the taxpayers, they've issued notice. So just imagine what is the kind of notices sent by State Department. So there is no comparison between what notices center is giving and state is giving. You can see, and since there is a cross empowerment, state government can issue notice to anybody. Central government also does, but then they are more responsible. So you can see if the targets have to be met, the notices are issued in a very blunted way, and recovery is happening. So I think there has to be some action, and we don't know if any amendment related to that for the benefit of taxpayers will be there, because they are taking advantage of some very draconian provisions in the law. So, and one more thing which you have to keep in mind is these are only recommendations. That means if any changes in the act, it has to be first brought in the Finance Act. Then it has to be brought by all the assemblies in their state act. And only once all the states, all the states, union territories, and the central government brings the amendment, then only this becomes a law. So you cannot have only a CGST Act having 74A section, 128 section. You should have even SGST Acts also having that sections. So it's very important. All the state governments also pass this amendments. So it takes a lot of time. Many a times we see even 1 year is gone. If there is an amendment if there is a clarification, a CBSE circular comes and they clarify. But if there is an amendment in the law, it really takes some time, because so many states to pass in the assembly takes time. And you know, our politics, opposition will delay if there is anything which is not good. So we have to wait and watch how the things are going to fare. But regarding the interest, regarding the penalty, regarding 16.4, it is clear, the intentions are clear. Government is going to come out. So even if there is a delay, there will be a stay which a High Court or a Supreme Court will bring. So there will be a stay on the orders or the recovery till the time government comes out with a clarification. So there it may be a little faster. We have to see. So with this, I close today's session. Thank you so much for joining. Let us wait for the budget. So we will have a full-fledged budget session. So I request everybody to come in good numbers for that, because that will be a real session for everybody. Thank you so much.
Thank you so much.
Thank you.